Good morning. Welcome to today's webinar event. This is Josh. I'm going to be your presenter today. I hope everybody can hear me okay. We're here to talk about kind of a crossover event between accounting and payroll, essentially posting a payroll benefits payment in church windows. Typically, these would be benefits payments for employees that we have set up and are paying through church windows payroll. Typically, there are three scenarios we're talking about, again, benefits payments for our employees, typically recorded from church windows, brought in from church windows payroll, and that's what we're going to detail on this today, okay, is if you own church windows payroll and accounting, how those come in from payroll into accounting and how they can subsequently get entered. There are typically three scenarios under which that occurs. One where the church pays the entire benefits package, payment, okay, that in accounting is simply recorded as a bill and a payment, charging whatever expense or expense accounts you want and paying it, okay? Isn't terribly much to that. That's the simplest of all scenarios. There's nothing that we have to do with regards to payroll that way, okay? And what I mean by benefits payments are things like pension contributions or medical and dental or insurance payments on behalf of employees, or FSA or HSA payments, okay? All of it depends on the employee's agreement with the church/employer, okay? There is no cut and dry scenario for this. It all depends on what the contractor agreement between the employee and the church is, okay? So again, all employer paid is very simple. You would simply go into accounting, you would go into enter bills, you would enter you would choose the vendor that you were going to pay or liability that you're going to pay in this case. Enter the bill for it, turn around and pay it, it's done. Okay, we're not really going to even talk about that much more than that, because the ones that become really tricky are these other two that we're going to talk about here, which is one where a situation where it's all employee paid. Okay, so where the employee has a deduction set up in church windows payroll. So if we go into payroll, and no, we're not going to go to our print checks. We go into employees, contractors, and if I find Steve Jones here, he should be coming up. I should be able to find him pretty quickly. There he is. If we go to now his deductions tab, we see Steve has a healthcare spending or an FSA essentially that right over here is linked to our 210-150 flex spending account, okay? He also has a pension payable as well. So if we notice here, third deduction down is pension 403B, $85 per pay. His health savings or flex spending account is $75 per pay. And the pension payable is labeled 210-130. The other employee that has these deductions as well is our senior pastor, Larry. So here he is. If we go back to our HR tab, back to our deductions, similarly, he's got insurance deductions, pension deductions, still crediting 210-130 all into the liability there. The one other thing, and we're going to talk about this one here in a little bit, hopefully I can get through this fairly quickly, is we notice here for Larry's insurance payments, we don't have them over here crediting on the right-hand side to a liability. Do you see how we have those crediting to an expense account? 510-347. Folks, you can credit. You have so many options with regards to how you post these. You have to decide. As I said, there's no cut and dry answer for this. All right? You decide how you want them to report. I can credit the insurance payments to the insurance payable if I wish, but that is one of those scenarios where part of it is employee paid and part of it is employer paid. Okay? And that's the one that kind of trips folks up the most, or when we get into those. Okay? But this linking here is vitally important. So if we now forego payroll for a moment and we jump back into accounting, all right, let's talk about paying our flex spending for Steve, okay? He's the payee. He's saving money, per a designation of how much he wants to allocate for flex spending for the year. There's a His vendor liability account is set up with him as the payee. When I want to write him, he submits a receipt to me for a medical expense. I go right into pay bills, quick pay, view vendors with a balance. Here's his flex spending account for the 150. That's for the April, say, that's for the, what I've got in there. I now go here, and he is our payee or vendor. Here's the checking account. The date occurred is good. I type in whatever I want to pay him. Okay. It is not a bill. It's payroll. So there is the software doesn't assume what I want to pay. I actually have to enter that amount. So he submits a receipt for me for, say, $52.75. And so I choose a payment method, computer check, or what have you, and I simply post and print checks. I print that check and I present that to him for him to deposit to help offset his flex spending monies, okay, or his medical expenses, all right? That's a simple one too, because again, it just puts the amount that's deducted from the employee's pay into the liability account or vendor account, and then we just go into pay bills and pay it. Virtually just like your taxes. Right? Payroll takes care of debiting all the expenses, crediting the taxes into the various liabilities. You simply go into pay bills, quick pay, view vendors with a balance. Boom, the balance is there waiting. You pay whatever you're wanting, less than the balance, the balance, more than the balance, whatever you want to pay out of that liability or vendor. Okay? So I could simply now go ahead and post that. All right? So his is done. So now these others become a little bit more tricky. So what we're talking about now is a pension. So down here under my chart of accounts, we notice here, I've got account 210130 called pension payable. All right. This is one of those situations where part of this is paid by the employee and part of it is matched or paid by the church. Okay. So if I now go over here or let's go back into pay bills, and if we go up to quick pay, view vendors with a balance, we see pension payable has our April balance for our two ministers of $390.68. Okay. That is what they have elected to have deducted from their paychecks to contribute towards their pension. Okay. But also as part of their compensation agreements with the church has also agreed to pay another added portion to that doesn't get recorded through payroll. All right. So we see here $390.68. That balance is what I encourage you to think of 210-130 as a holding account. It is holding their balance that has been contributed from payroll until we go in and either enter the bill and then subsequently pay it. All right. So now we want to post our payment, record the church's portion or contribution to that. So then we're going to go into enter bills, and I'm going to go right up here and we're going to backdate this, say, into May. Let's say we paid that May 11th. And then right up here, I'm going to find 210-130. Here's my pension payable. And then down here, if I type this in here, see, I can come in here and type in, senior minister's pension, and I can put in whatever amount, I'm matching for Larry. So if we put in $500, I come down here and I go up and I go associate pastor. So here's associate minister pension. And here we've agreed to pay his as $487.77. Okay. So a combined total that we're matching or adding in of $987. And I meant to make that 65. So I need to edit that. That's easy to do. So 487.65. Okay. So now if I click done, add to batch, this is very important, folks. If we now go up to show running balance, boom, notice right up here under my show running balance window, we see pension payable shows their current balance of $390.68. It's adding in the church portion of $987.65 with the amount that I want to pay, the amount of the payment that I want to pay to Board of Pensions or whomever my vendor is or payee of $1,378.33. and look at the effect it's having on the respective expenses. This is doing exactly what I want it to do. I can now click post and pay these bills. We're not going to print it. So now it opens up my pay bills window and it has checked my bill for $987.65. But what it has not done is it has not added in the $390.68 that the employees have contributed, again, because their contribution was brought in from payroll, is not a bill. So I have to tell it that I want that payment to be, that amount to be added into that. And I do that by simply clicking right here where it says amount to pay, and I change the amount to $1,378.33. And then starting left to right, make sure my date occurred is correct. Here's General Board of Pensions for my vendor. My asset account is correct, amount to pay. I choose my payment method. Computer check is fine. I can enter any desired comments if I wish. And again, I stress this a lot, show running balance. And if we notice here under the show running balance, the effect of my payment is zeroing out my pension payable. I have now put in and paid out of that account the exact amount that I want to pay to Board of Pensions. But you have to edit the amount to pay. That's the part that trips folks up. That's why using this tab called Show Running Balance is really important, folks. I stress this on all my support calls. It allows you to see what the effect of the transaction will be on all of the accounts involved before ever posting it. You've got it in enter bills, pay bills, journal entries, transfer transactions, all over the place. Use it. It will help minimize your mistakes. Okay? So I know that this payment is now correct. Bill and payment are right. I can now click post. Okay? I'm not going to print that. All right. So the final scenario, sorry folks, there were four. There are three that's kind of crosses four. All right. So you remember the one over in a payroll, we had the two employees where basically their insurance was crediting an expense account. I could credit the insurance payable from payroll for them and basically have their balance sit in there just like the pension payable for the $390.68. The other option for you is that you would credit the expense account for the insurance for the employee's share. And where that becomes really most easy for you to see what that transaction is going to be is if we go into the chart of accounts and we look at this medical insurance church share. If I go to the balance tab, we see right here under April, I've got a negative 701.24. Why is it negative? Well, because that's the effect that a credit to an expense has. So this represents both Steve and Larry's contribution to their insurance. Okay? That is what a credit does. The actual church's share of that is the difference between the payment amount and the amount that's been credited and the amount of the payment. Okay? So all I have to do now is when I go into enter bills, I have to go ahead and enter, say, my insurance payable. What account is that? I'm sorry, 210140. Here's my medical mutual insurance. I choose account number 510347. There's my medical insurance expense account. I type in the full amount of the payment of the $1,834.77. And when I click on add to batch, oh, I didn't want to check credit memo. That was my fault, folks. Unchecking that. My bad. Click on add to batch. And again, we go up to show running balance, and we now notice that the medical insurance expense account negative 701 debited 1834. The actual church portion of that now reflects on my treasurer's report is the $1,133.53. So when my treasurer's report for the month or the year to date now reflects what the actual church's portion of that was, I can now simply click post and pay these bills again and record my payment for the $1834.77. Same thing, checking my date, my vendor, verify my asset, my amount to pay. And again, when I go up to, and my payment method, of course, too, any desired transaction comments that I want to put on the stub. And finally, when I again go up to show running balance, we are verifying that the insurance health life insurance payable has the current balance of the 1834.77. The transaction effect was 1834.77 and the adjusted balance is zero. The payment is clearing out that liability exactly as it should. I don't ever put money into a liability typically, folks, that I'm not going to ultimately pay out of it later. Okay? So I would again simply click post or post and print checks if I'm ready to pay that. Print that, excuse me. So finally, before we wrap things up, I want to go in and look at, say, our treasurer's report so you can see. So if I now backdate this into, say, did I date that in June or May? I think I dated it in June. Sorry, folks. We're going to go into June and check. But now it really doesn't matter because the year-to-date total under 510,347 is correct. It represents the church's portion exactly. So right down here, when I go down to the bottom, here's my medical insurance, insurance employer church share. Year-to-date balance shows the 1133.53. Then whether that's the year-to-date or period activity, doesn't matter. It's right in both cases. I did debit at 1834.77, but the actual year-to-date balance is actually 1133.53 because of the 701 and change that was credited to that expense from payroll for the employee's share. So it nets out to the exact correct total. Okay, so it is 1150. So folks, finally I want to say on that before that is the same process is followed every single month. It doesn't, unless something changes about the process or the requirements or the payments or the reporting needs or something on it, you're going to do the same thing for those benefits payments every single month, whether it's monthly or quarterly, semi-annual, annually, it doesn't matter. You'll do the same thing each and every time. And again, those accounts should typically get back to zero. The liabilities, I mean, that is, or vendors. All right, that is where I'm going to leave it for today.